For more exclusive content from CNBC Crypto Trader, hit the subscribe button now.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
Market cap at under $130 billion as Bitcoin hovers under the $4,000 mark. Ethereum Classic hit with a 51% attack. Should they have expected it? Russia rumored to be switching its currency reserves into Bitcoin. Shapeshift lays off 1/3 of its workforce. Kraken publishes a law enforcement report. And the US government still on shutdown as the SEC deadline looms for the Bitcoin ETF. It's 2019, Bitcoin is still not dead. We're back from our month-long production break. And tonight, like every other night, here on CNBC, we're all in on crypto. With 2018 now firmly behind us, the crypto market started the year on a slightly more positive note. Bitcoin entered 2019 at just over $3,700 and has edged up ever so slightly in the first 10 trading days of the year. Ethereum, XRP and many other big names followed suit, but there were others like Tron that's gone up over 50% this year alone. 2018 was a tough year for crypto traders, but it did teach us a whole lot of valuable lessons. Lessons that we'll never forget. Like, we now know for sure that if your Uber driver, your grandmother, your hairdresser, and your restaurant waiter are all buying an asset and making money, it's probably a good time to sell. We also know that just because something is called a utility token doesn't mean it'll ever have utility. We know that the SEC believes that Floyd Mayweather is a great boxer, but he may not be such a good investment advisor. And we also know that Dr. Craig Wright has more money than some African countries. But the biggest lesson we learned in 2018 is that in this game, there are no experts. And anyone making price predictions in the crypto market will look really stupid on the 31st of December. Whether it was Mike Novogratz's call that Bitcoin would finish the year at $40,000, Arthur Hayes who raised his call by $10,000, my call of $50,000, or Tommy Lee who kept changing his calls and then eventually opted to change the calendar to try and save his calls, not one of these experts called Bitcoin anywhere near the $4,000 mark. Let's take a listen.
Bitcoin could be at 40,000 at the end of the 2018. It really easily could.
These calls are a bet that if it's volatile to the upside, we could easily see over $50,000 next year.
50,000 by the end of the year.
I think Bitcoin still has really bright prospects. I mean, we think it's going to be at least 20,000 by middle of this year.
Are you sticking by that forecast?
Yes. Bitcoin, let's say we think can reach 25,000. It doesn't require Bitcoin to go up every day till the end of the year.
So, 2018 taught us that when it comes to price predictions, those that know don't predict, and those that predict don't know. So with all the valuable lessons now in the bag, let's get straight into 2019 and find out what the experts, the real experts, think we should be looking out for in 2019. Tonight we're going to be talking about all things crypto in 2019 with a great mixed panel. I've got a crypto evangelist, Anthony Pompliano from New York City. I've got a researcher, Arjun Balaji, who wrote a fascinating thesis about crypto in 2019, and a fund and product manager, Meltem Demirors, all the way from New York City. And I know you've learned a lot of valuable lessons in 2018. Do you think that the worst is over?
I don't think that we've got much farther to fall, but I also don't think that it's over. The likelihood that we have a major recovery in 2019 is probably low in my opinion.
So you think that the chance of a recovery in 2019 is low. What makes you think that?
I think that it's likely we kind of just go sideways for a while, right? You know, if you look at Bitcoin's price, I don't know, maybe somewhere between like 2,500, 4,500 for a good portion of the year is probably likely based on what we're seeing.
Meltem, how convinced are you about what Ant is saying? Do you agree that the worst is over?
So I think some of the pain is going to continue. Unfortunately, one of the realities we saw in 2018 is many token projects, many of the ICOs that fueled the speculative boom in crypto, which in turn fueled many of the exchanges and the other venture capital backed projects, all of the applications, a lot of those projects don't really have a sustainable business model. They're really just dependent on the continued price appreciation of a token. And so I do think for 2019 and beyond, we're going to continue to see a lot of different business models struggle. But I think there are new spaces, security tokens, for example, or doing regulated issuances using the blockchain as a digitization tool that will create new opportunities. And then we'll see people in the ICO space in business model categories that are struggling try to consume some of those ideas to create new speculative interest.
Arjun, I'm looking at you. What do you think? Do you think that we've seen the worst of the bear market and that 2019 may bring some kind of reprieve to investors?
I don't think we've seen the worst yet. The market, I think, still has yet to bottom out. Regardless of how I feel about it, a lot of the tokens that you see trading in this market, they're virtually zombies. They haven't been fully flushed out of the market yet. So until that happens, I'm a little skeptical that the market's fully bottomed out. I think we'll see that sometime this year.
Okay, now let's dig into some specific topics and what we can expect in 2019. Arjun, let's start off with Bitcoin. What will be the Bitcoin highlights in 2019?
Bitcoin is going to see massive improvements across both scalability and privacy. I think scalability with the growth of the Lightning Network, I think we'll see an order of magnitude type growth there. And with privacy, there's a number of on-chain privacy improvements that are coming that are in the pipeline for 2019. So I'm really excited to see that.
Arjun, what about adoption? You talk about improvements, you talk about the Lightning Network, you talk about privacy, but what about people using Bitcoin for what it's actually supposed to be used for? And what is Bitcoin actually supposed to be used for?
Yeah, those are two good questions. I think to answer your second question, I think Bitcoin is used for all kinds of things. I think of it personally, for me, living in a first world country, I think of it primarily as a call option on a future store of value, because Bitcoin's not, it's not a stable store of value yet. We're still in this kind of rapid price discovery phase. I think for other people, they might want to use it for payments. They might have all sorts of uses, but even speculation, I think, is right now the primary use case of Bitcoin. So I'm not too worried about more people using it for payments or for trying to push these different adoption type narratives.
Okay, so Arjun sees Bitcoin adoption as adoption by speculators. And how do you see Bitcoin adoption? And what do you think will be the big story for Bitcoin in 2019? Will it be a big year for adoption?
Yeah, adoption can be broken down in a couple of different ways, but all of the underlying fundamentals show that adoption has continued to increase even through the bear market. So if you look at hash rate, it 4x'd in 2018. If you look at the number of transactions from March of 2018 through December, continued to increase. And over $400 billion was settled on chain for Bitcoin last year. And so I think that's only going to continue into 2019 and beyond.
And adoption is a function of usability, and in this case, speed and transaction cost. What do you think? Is Lightning going to be the big story of 2019?
Yeah, I mean, Lightning is the growth there is incredible, right? I mean, in less than 10 months, they went from 0 payment channels to over 18,000. They literally added 1,000 payment channels last week in about 3 days. So I think that's just going to continue to grow as more people understand what it is. They join the network, and those network effects take over. And I think when we think of adoption around Bitcoin, this isn't just a one-year exercise, right? We're talking about 5-10-year exercise. But every single day counts, and Lightning is obviously one of the fastest growing things around scalability and usability.
So is Lightning the biggest Bitcoin story of 2019?
I think it's probably one of the stories. The other two stories are if a retail product gets approved, I think would be big. And then the third is actually who's buying. Right. I think previously to 2018, we saw a lot of retail investors, almost majority retail, but institutions are starting to come in, slowly but surely. And so it would be a huge deal if sovereign wealth or pensions or anybody like that started to buy Bitcoin. And I think that we'll see that in 2019.
Do you think that 2019 is the year of the Bitcoin ETF?
I have no clue. I think I might have told you this before, but the thing I'm looking for on the ETF is the consensus thought is that the ETF gets approved and price is going to explode. I think it would be really interesting if it gets approved and price goes sideways or actually goes down. It's kind of a non-consensus thought right now, but it's definitely possible. And so we'll see what happens if it gets approved.
Meltem, you have a firm view on the Bitcoin ETF. Do you think that it gets approved in 2019? And if yes, Is it going to be the Vanek ETF?
Absolutely not. And here's my view on why. Number one, there is no upside to the SEC in approving an ETF. There's only downside, especially in the current US political climate. I think people forget that the SEC, the CFTC, these people are appointed. These are political positions. And so in this current sort of stalemate where you have Democratic House, but Republican Senate, you're seeing some clashing. There are very different views on financial innovation and what should happen. But I think right now there is no upside to approving an ETF. There are fundamental concerns about market stability, market oversight, and no person at one of these agencies wants to go in front of Congress and explain why US consumers lost money to Bitcoin.
Arjun, is the Vanek ETF going to be approved in 2019? Are we going to get an ETF at all in 2019?
Yes, so I think it's actually quite likely we could see a single asset ETF. I think it's quite possible we could see a Bitcoin ETF, a spot ETF, but I'm skeptical that we would see ETFs for kind of baskets of cryptocurrencies or other products in 2019 come online. Of all of the potential contenders, I think Vanek is probably the team that is most credible and pedigreed and has a very strong brand and should be able to make some noise if an ETF does get approved.
Okay, so that's the Bitcoin story for 2019, and we may or may not get an ETF. Arjun, what happens to Ethereum in 2019?
Ethereum, I'm a little bit more skeptical of, as well as for a number of reasons. They're going to see major improvements to the protocol itself. They're basically embarking on Ethereum 2.0, which is pretty much a full rewrite of Ethereum 1.0. It has this kind of multi-year phase out. They have a lot of competition coming, both from different interoperability protocols, different competitors to Ethereum itself, that all have these kind of massive ecosystem funds. So I think it'll be an interesting year ahead. I wouldn't be surprised if some set of developers, dApp developers, either moved to other protocols or kind of got lost in the shuffle from Ethereum 1.0 to the 2.0 transition. I think we're going to see a real questioning of some of the use case of Ethereum, which I think of primarily as capital formation. As the ICO market has kind of cooled down, a lot of people are a little bit more wary of that specific use case of Ethereum. So I think that we'll start to see more newer narratives develop. One of the dominant narratives right now is open finance and building the open finance stack. So I think that will start to mature substantially over the course of the year.
So we know that Ethereum has big plans for 2019, including a move to proof of stake. Is 2019 going to be the year where proof of stake takes off and becomes a viable alternative to proof of work? And if that's the case, is that the right move for Ethereum?
In my post, I actually noted that there was even a possibility that we would see a proof of stake proposal from someone like Zcash this year. I think that 2019 certainly could be the year of proof of stake. Do I think that's the right decision? I'm much more oriented around proof of work, and think that proof of work is actually the optimal solution going forward. But we'll see. I think that certainly a lot more teams are exploring it, and we'll see some of these proof of stake proposals come to maturity this year.
And I'm looking at you again. What do you see as the big story for Ethereum in 2019?
I think the big thing around Ethereum is the actual applications, right? So there's tons of stuff that has been built. There's a lot of ICOs that raised a lot of money that said they were going to go build things in 2017. 2 years later, we got to see some of these projects come to fruition. And what I'm really looking for is the adoption, right? Just releasing the product is step one. I think a lot of projects will actually get to that milestone. But what I want to see is, can we get, a couple 100,000 users on one of these or two of these applications and using this thing on a daily basis? I think that would be a fantastic milestone for Ethereum, and really make a bull case for the potential moving forward.
So is 2019 the year of the killer dApp on Ethereum? And if it is that year, what is this killer dApp?
Yeah, look, I tend to agree with Ben Horowitz on this killer app question, right? He recently was on stage and gave this interview, and he said, look, with the internet, no one got the killer app right. No one thought that Facebook, for example, was going to be the killer app of the internet, right? I don't pretend to know what that killer app's going to be. What I tend to look at, though, is where are the users? The users are going to vote with their time, right? They're going to spend time using certain applications, and I think that there's a lot of developers that are building very interesting things, but it's just going to come down to what does the data tell us is that killer app, and I think it's going to be something that no one's expecting. So I just don't even try to guess.
And if Ethereum is not the chain that will be used to develop dApps and run smart contracts, which chain will compete with Ethereum here?
Bitcoin.
Bitcoin. Are you thinking that this would happen through some kind of protocol like an RSK?
So if you think of Bitcoin, right, this thesis that a lot of applications will move towards the most secure chain if there's feature parity, right? So if you can build smart contracts on Bitcoin just like you can on Ethereum, right, all that parity of features and functionality is really important. Now, that can happen through things like Lightning, through side chains, Liquid, RSK. I mean, there's all kinds of things that people are building. The part that I love about what at the stage we're in innovation is everyone is experimenting, right? And there's no sacred cows. Everyone can try different things. I have no clue what's going to work. Right? We just want to make sure we're aware of what everyone's building. And then, there will be a solution that someone will figure out. I think Ethereum's got a place in the world in the future. I think Bitcoin is going to be much, much more important than people actually think today. And so it's going to be fun to watch all this play out.
Melton, do you agree with Anthony here that Bitcoin is the chain that will compete with Ethereum on dApps and smart contracts? Or do you have another chain in mind?
I think there are a couple of chains that are really interesting. Obviously, I'm personally excited about Tezos. I've talked about Tezos before. I own Tezos, full disclosure. I think Tezos is coming out with a lot of interesting features. Its language is really robust and has formal verification. It's written in OCaml, which I think is a popular language with people in the finance community. I think Cardano is coming out with interesting new features. They're moving to proof of stake Q1. Not that many people using Cardano today, but I think the team has a lot of capital and a long runway. And I think that's one of the key features we're seeing actually with platforms is people who have a lot of money, who did a good job with treasury management, now have a lot of time to experiment, and they have a massive lead on other projects who may be more capital constrained. So other chains, yes, opportunity. But I think, again, the question's really, what are smart contracts going to be used for? Enterprise setting or in the public domain? And if so, what protocol is sort of best suited? Don't know.
Melton, do we see a killer dApp in 2019? Do we see like one dApp that brings millions of new users into crypto?
I personally hope so. To me, I've been hoping for that since I first got into Bitcoin. I think Bitcoin for a lot of people, especially now with LND and apps that enable people to use the Lightning Network, may become a bit easier to use, which I think is exciting. I think while this is a bit controversial, the social messaging platform Gab is starting to integrate crypto payments because they've been rejected by so many payment service processors. That might be a way that 1 million or a couple million new people get onboarded to crypto and Bitcoin in particular. I actually think the more interesting play on onboarding people into crypto, the Trojan horse, is central bank issued digital currencies. So I could very well see a central bank choosing to issue its own currency through a form of token or a digital version of fiat, and that will enable people, it will force people to create digital wallets, which then, they start learning about how to custody, hold tokens, interacting with digital money, which could then create some of that infrastructure for when the next boom happens, them to also use those wallets for Bitcoin and other crypto assets. But I think in the interim, there's still so much work that needs to be done around the user experience. And I think the education is so fundamentally lacking. People just really don't understand public-private key infrastructure. They don't really understand how these things work. And I don't think they need to understand, but there's no real catalyst other than speculation, which is what we saw over the last 18 months, that's driving people to really learn and understand, which is what we need.
Arjun, you said earlier that Ethereum has a whole lot of challenges. And because Ethereum is facing all these challenges, many developers may jump off to a different chain. If they do this, which other chains will the developers move to?
They've been working on it very quietly, but I actually think that the blockchain that's gotten some buzz, at least from where I sit, is EOS. And I don't know too much about it. I don't know too much about all the teams that are building on it, but they certainly have a very large war chest. And the rumblings that I'm hearing are that a lot of developers are more interested in EOS, which makes a different set of trade-offs around transaction throughput and centralization. For most app developers, that might be a trade-off that's appealing to them given the potential performance improvements.
Now, both you and Melton talk about protocols with big war chests. And presumably these big war chests were raised as a result of some kind of ICO. Do ICOs die a painful death in 2019, or do we see more ICOs in 2019?
I certainly hope not. I think that ICOs, as a capital formation vehicle, especially for for the most part, are unregistered securities. I think that ICOs that we've seen in kind of 2017, 2018, very few of them have lived up to anywhere close to the potential that was promised. And so I think that in light of wanting stronger investor protections, I think that the ICO as capital formation vehicle, we've already seen pretty much die over the course of 2018. I don't think they're going to make a comeback, at least for sort of the generic platform or utility token type model. Where I'm excited about ICOs as a capital formation vehicle is for potentially actually just illegal securities offerings. I don't know that this will. I'm not sort of endorsing this view, but I think it's that we'll start to see a lot more of capital formation happen that way, where what you get is a claim on cash flows of some sort of real business. Do I think it's the best way to raise money? No, but I see the use of blockchains number one as being regulatory arbitrage, and sort of pursuing these different anti-status activities. And so I think that's a potential use case of the ICO that I think could make a comeback in 2019.
Regulatory arbitrage doesn't sound like a pretty good long-term business plan to me. And as far as I can remember, you've been cautioning about ICOs since about 2016. I see you smiling from ear to ear. Are ICOs dead in 2019?
So the ICO is the only vindication that I get after the last 2 years of taking a beating online. In 2016, we said, we thought ICOs were probably not the best investment opportunity. I think that's played out both from a price standpoint, but also from a regulatory standpoint. There is likely to be a way to sell tokens, whether they're considered securities or not, in the future in a regulatory compliant way. I think that we've got to watch what regulators are saying. I think we've got to watch what investors are willing to invest in. I think we've got to watch, kind of what the product of that is from founders, right? Do they actually want to sell tokens? Do they want them to be equivalent to equity? Do they want them to be non-dilutive utility tokens? I don't think we know yet, but I definitely believe that people will be selling tokens, whether the securities or not, in the future in exchange for funds to help them build their company.
Meltem, ICOs, dead or alive?
ICOs that have massive 100% pre-mines, I think definitely dead, although people are still trying to raise them, which makes me believe that there's still people buying them. But I think we're now moving more to mining schemes like Zcash's model, which is being deployed by Beam, which is an implementation of Mimblewimble, where people actually have to do work in the network to earn tokens. And then some proportion of the miners' mined tokens go towards a development fund or go towards a founder reward. So I think we're going to see more structures that start to adopt features of other models that were successful in building community interest and getting a lot of vested interest in these things. Pre-mines obviously were a terrible way to align incentives. So I think we're going to see experimentations with the form and function, but tokens definitely going to continue.
Okay, now speaking of ICOs, there were a whole lot of crypto funds that built their businesses around superior access to deal flows on ICOs. And in fact, if we look at the fund landscape, it's not a pretty place. What happens to all the crypto funds in 2019? And Ant, I'm going to look at you because you've got that smile on your face again.
Oh boy, are they in trouble. I think that, look, there's some that have already started to shut down. I think as we move into 2019, if the market continues to go sideways, a lot of fund managers will close up shop. Let's say that there's 400 crypto hedge funds. These are trading liquid cryptocurrencies. My guess is that the bottom 250 of those are in a world of hurt right now, right? They've got a 4 or 5x to get back to their break even and get back to that high water mark. The managers are probably a little bit less sophisticated. They've got a harder time fundraising. And so those are that 250 of the 400, I think, are the first to kind of shut down or return capital to investors. And then I actually think in the top, let's call it the top 30 to 50 funds, there's some people who are much more troubled than the public knows. And, without really getting into all the details, I think what happens is there's a number of people who jumped into the industry. They thought that this was going to kind of be really easy, just pick every project that's going to 15, 20x. And now they got to dig in, right? They've really got to do the work. They've got to figure out what's overvalued, what's not, what has a high likelihood of working, who are good founders, who aren't. And that work is hard, right? And it takes experience and a skill set to do it. And so it'll be very interesting to see, are there anybody in that top 30 to 50 funds that just say, look, this isn't for us. We're going to shut it all down. Or do they actually switch strategies, right? Do they say, look, I'm not going to trade anymore. I'm going to move into venture, or I'm going to do something else. Who knows? But I think that there's going to be less than 400 at the end of 2019 for sure.
Meltem, how do people who invested in crypto funds feel now getting these monthly reports showing them that they're 90% down and that they've lost 90% of their money?
So people who invested in those funds are pissed. I would be angry too. The 2 and 20 model for less than market beta is crap, right? Arguably, Bitcoin is your market beta. Bitcoin's down 70%, you're down 85%. I'm not going to be happy. I think the bigger issue is a lot of people running these crypto funds were not paying themselves salaries. They're trying to live off the 2%. They're not going to make their 20 because they're not going to hit their high water mark. So their best incentive is really to shut down the fund, figure out a way to liquidate the assets and go start something else, because it's going to take them 4 or 5 years to really get paid. And I empathize with these managers. You know, they wanted to try something new. They didn't really know. In some cases, they think what they were getting into. Everyone was living on moon fumes, and now we're back to reality.
Okay, so the consensus is that the funds are in trouble, but what about the institutional money flowing into crypto? And I cringe every time I say that, because for years we've been talking about the institutional money coming into crypto. But is 2019 the year where the institutions come into crypto? Meltem, I'm looking at you because I know you've been working on this for ages.
So in 2015, I pitched crypto to institutions. That was all I did for, a long time. And so are the institutions coming? Yes, but not in the magnitude people think they are. The problem with institutional capital is a lot of the investment strategies today aren't scalable to billions of dollars. And most institutions, when they're looking to allocate capital, they're not writing $10 million check or trading on Binance. They want to do size. So the issue is there isn't enough liquidity or market depth on these order books to bring in massive amounts of institutional capital to really grow this into a multi-trillion-dollar asset class. But at the same time, the lack of liquidity makes it difficult to build all of the tools. So there's sort of this chicken and egg problem. I think what we will see, though, is institutions start to get more involved in Bitcoin development. I think particularly we see institutions putting on small Bitcoin positions to really start building that competency so that when that time comes, they'll have the know-how, the execution capability, and the relationships to actually transact in size. But do I think we're going to see billions of dollars of new capital flood into the market from some of the largest asset managers in the world? Probably not.
Arjun, are we ready for the big Wall Street money yet?
I think we are close to ready, yes. And I think that 2019, it's not going to happen immediately. It'll be a very, very slow trickle. But I think that 2019 will be the year when we start to see some of the institutional capital come in. Some of the foundational infrastructure that they need is only now being offered by firms, whether it's Bakkt or Fidelity Digital Assets or ErisX. There's a number of different firms that are offering products for institutional customers, including some of the traditional exchanges like Coinbase, which are significantly ramping up their focus on institutional traders. I think that 2019, we've already started to see some of the pension funds think about high level allocation in 2018 as they started allocating to some of the larger, more pedigreed crypto funds like Paradigm or A16Z Crypto. I think we'll start to see more of that activity in 2019 with crypto being more formally thought of as a real asset class, particularly with Bitcoin being more accessible than ever with all kinds of new instruments coming online.
And I'm looking at you again. It sounds like there may be a small trickle of institutional money flowing into crypto in 2019. And it's a far cry from the excitement that we saw last year from Wall Street. Now, speaking of Wall Street, are we going to get Wall Street people still moving into crypto? Is that still an exciting move? Right now, the stock markets look a lot more stable than crypto, and that's even with the US government shutdown.
Yeah, look, it is. Look, smart people want to work on hard problems, right? And so that's smart people from Silicon Valley, from Wall Street, anywhere. I think that crypto probably provides some of the hardest problems in the world right now. I think it also provides some of the highest upside in the world. So anytime you can take an intelligent person that's ambitious, put them in a situation to solve hard problems and potentially make a lot of money and build really big, large, world-changing things, I think that you're going to catch their attention. Now, will it be at the pace or the accelerated rate that we saw in the past? Probably not. But I think that we'll still continue to see people leaving Wall Street, joining crypto. I think they may be a little bit smarter about where they go, right? So we'll see them go to more kind of for-profit, equity-based companies where they get a salary and some upside. But I don't think that's going to stop. And then the other thing is, the reverse is happening. Like the technologists are conducting an all-out assault on Wall Street, right? And so actually what's happening is you're seeing the technologists and the Silicon Valley kind of core types of individuals move to Wall Street and say, look, I'm going to come build a bank. I'm going to come build a payment company. I'm going to come build, an asset management or trading platform. And so you've got this really interesting kind of migration of talent in both directions. And I think that ultimately that ends up being a net positive for crypto.
It sounds like it may be a case of needing more SEC clarity before institutional money can flow into crypto. Meltem, now that Floyd Mayweather is out of the picture, what can we expect from the SEC?
I think when people talk about the SEC, I think one thing we have to keep in mind, the US government is currently on shutdown. The SEC is an agency that has, very few funds. It's not that well capitalized. And so I think the SEC will go after more slam dunk cases that are clear violations of securities law, where they can make a case, open, close very quickly. I think they may try to go after one or two of the larger players to make a point, but I really think the SEC is in wait and see mode. Honestly, I empathize with the people at the SEC. They're probably tired of getting accosted by crypto people day in, day out. I definitely empathize with Vanek, who's their quote-unquote crypto czar, because she has to field a lot of this inbound of people coming in saying, well, can we get the blessing of the SEC for this offering? They're going to continue to wait. They're going to pursue clear violations of U.S. securities law. But I think a lot of people have already said this, nothing new. I think the U.S. securities law is going to remain as it is for the time being. There's no incentive to change in this political environment. And again, the SEC is not that well funded. They only have a limited number of resources. Crypto is a teeny tiny part of the U.S. capital market, teeny tiny part. They have a lot of other stuff to worry about. So I think they really just, crypto's over here, a lot of other stuff going on, especially given the fact that no one's getting paid in Washington right now.
Now, speaking of the SEC, Kraken published a tweet this week that broke down various legal requests that they're getting from regulatory agencies. We'll take a look at that just after the break.
Christian, buddy, come sit over here. Now, the advertising offers have been flooding in. Look at the pile of offers I've got here for you. Look, let's just take a pic. Picture this. You're hiking through the Rocky Mountains, okay? And you're carrying gorgeous rosewood designer door on your back. And you look into the camera, and then you say, oh. No, yeah, you're right. It's terrible idea. For the next one, you'll be carrying a refrigerator on your back, environmentally friendly refrigerator, and then your line is, well, actually, it's just one word. We'll put that one on ice, okay? Yeah. This is a hot dog chain. You're carrying this huge hot dog on your...
Enough! I've had it. No more carrying, no more saying that word ever again. I'm a serious actor. I have depth. Why can't you get me something with like an office with a tie, for example?
Action! Bitcoin is crashing. We have to sell
Bitcoin is a bubble! Hodl. 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 I have to find a new agent.
Kraken, one of the world's largest exchanges, published a transparency report this week that shows the large number of requests that they're getting from regulatory agencies. The report highlights that agencies in the United States of America account for 70% of all the requests, and that most of the requests are used to investigate individual crimes. Regardless of the reason for the requests, it does highlight the cost of dealing with the agencies. And this cost must take a toll on the agencies and ultimately must be passed on to consumers. With me on the line from San Francisco, I have the founder and CEO of Kraken, Jesse Powell. Jesse, welcome to Crypto Trader. Jesse, it was a bold move to publish a report with this kind of information. What was your thinking about making this kind of information public?
Yeah, so we wanted to be transparent with the community and not just the crypto community, but also the law enforcement and the regulatory community about what the kind of the total impact is on a single service like ours for these requests. I think there's a misconception that crypto companies in general are somehow skirting the law or facilitating illicit transactions or not cooperative. And the truth is that we invest a lot into compliance and to working with law enforcement and regulators. And, this is a snapshot of one company. I'm sure there are many other companies in the space with similar or more requests than we get. So I was hopeful that putting this out there would start a conversation. It would raise some awareness, and it might encourage some other companies to be transparent about their numbers as well, and help us kind of assess the total impact on all of these law enforcement and regulatory inquiries.
Jesse, you seem to be getting requests from multiple agencies in multiple jurisdictions. What is it that they're really after? Are they looking for individual records to investigate criminal activity? Is it tax frauds? Is it money laundering? What is it?
Yeah, it kind of depends on the agency that's asking. They all kind of have their own agenda. Like the DEA in the United States generally is inquiring because they have some existing kind of drug case that they're investigating. And maybe one of the drug dealers in their investigation was found to be using Bitcoin, or they suspect they're using Bitcoin. The IRS obviously is more interested in tax evasion. So it really comes down to the agency. But for the most part, it's crimes that are being investigated. And in those cases, they're targeting a few people or one specific person. The requests that come from the regulators, like the SEC or the CFTC, are the ones that tend to be extremely broad in asking for giant swaths of information, like all of the transactions ever on a certain coin and everybody who ever traded a certain coin, that kind of stuff. You don't really see that from the law enforcement agencies.
Jesse, what's your best estimate of how much this is actually costing you on an annual basis? I mean, it can't be cheap evaluating every request, then responding to it formally, whilst balancing your commitment to your customers about a certain level of privacy. How much is this actually costing you?
I estimate that it's costing us around $500,000 to $1 million a year. It's not just, so there are several full-time staff on the compliance team that are only processing investigations and subpoenas. And, it's not simply a matter of turning over the information. Like I said, there's often a very lengthy back and forth. There's also the process of actually vetting the inquiry to make sure it's a legitimate inquiry and not a scam, so like somebody attempting to fish information from us with a fake request. So we do a lot of vetting of that. There's a lot of back and forth in education. There's often some sort of redirection, like let's say the United States is asking for information on a UK client. Well, like we have to go back and tell them, look, you need to route this through the UK regulator and have them make the request for you.
Jesse, this report doesn't make the case for decentralized exchanges, and specifically decentralized exchanges where customer data is not stored on a central point. Isn't this the primary reason for decentralized exchanges to exist?
Well, it depends on how decentralized they really are. What we've seen from the Ether Delta case is that if you are known, you're the known developer, sole developer of a project, then you're the weak link, right? And they're going to go after you. So I don't think that they would see that as being decentralized if they're aware of one maintainer. I think if you can do it completely anonymously, and there really is, you can kind of put it out there and disappear like Satoshi did, then you have a stronger, defensible position there. You're not likely to be the weak link and have the thing taken down because your identity is compromised.
Jesse, is there any way to avoid this? It sounds to me like there are a lot of bad people doing a lot of bad things, and the authorities have a responsibility to investigate this. Is this just the cost of running a crypto business?
Well, right now it's the cost of doing business. There's not really a way to avoid it if you yourself don't want to go to jail. It is a legal requirement that we process these requests, and if we don't, it's going to be us that is under investigation. So, for any big business that's in the public eye, you just have to do it. Possibly you could try to remain small and ignore the regulations, but you can't grow a business like that. The only possible way around this for the future is to do what Satoshi did, which is to just put something out there, a decentralized exchange, and do it anonymously and then disappear. And you may not be around to benefit from it directly, but that would possibly create an exchange where there's not anybody that you can go to for identity information. However, that's not going to stop law enforcement from following the trail. Like they're going to use their tools and track the coins somewhere, and there's going to be some point where they're going to go to somebody and ask them for more information.
Well, I guess the only solution is for a Satoshi-type decentralized exchange. Next up, Peter Brandt, the chartist that called Ethereum all the way down to $120, tells us what he thinks of the charts on crypto Twitter. Don't miss this next segment.
Christian, buddy, come sit over here. Now, the advertising offers have been flooding in. Look at the pile of offers I've got here for you. Look, let's just take a pic. Picture this. You're hiking through the Rocky Mountains, okay? And you're carrying gorgeous rosewood designer door on your back. And you look into the camera, and then you say, oh. No, yeah, you're right. It's terrible idea. For the next one, you'll be carrying a refrigerator on your back, environmentally friendly refrigerator, and then your line is, well, actually, it's just one word. We'll put that one on ice, okay? Yeah. This is a hot dog chain. You're carrying this huge hot dog on your...
Enough! I've had it. No more carrying, no more saying that word ever again. I'm a serious actor. I have depth. Why can't you get me something with like an office with a tie, for example?
Action! Bitcoin is crashing. We have to sell
Bitcoin is a bubble!
Hodl. 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 I have to find a new agent.
One thing the 2018 crypto bear market didn't manage to wipe out was the chartists. Though they did go into a little bearish hibernation, as soon as the sun came out, the charts were all over social media again. Thousands of charts with even more lines, and most not even vaguely being able to predict the market. One chartist who undisputably did call the market correctly was Peter Brandt. Peter called Ethereum down to $120 when everyone else thought that was impossible. He seems to have called it right time after time. Peter, when you see the charts on social media, specifically on crypto Twitter, what do you think?
I see a lot of people who have been smoking fairy dust. I mean, it's not real technical analysis, make-believe technical analysis. What I see are a bunch of charts that are being posted and marked up that in no way reflect some of the old tried and true principles of technical analysis. People are reinventing technical analysis to fit their own personality and their own bets. I mean, I see a bunch of people. You look at them and they look like maps to the outer galaxies. Quite frankly, I mean, it looks like Star Wars maps. I mean, technical analysis historically deals with what we have right now. What is the market telling us right now? And what is it telling us right now relative to what happens next? And I look, and these people have lines going out to $1 million, and a line going up, and a line going down, and a line going up. And I kind of go, where do they get this stuff? This just is not based on anything that I would consider to be classical charting principles. It's based on people's hopes and dreams, and that's about it.
Peter, you had a series of very accurate calls on crypto Twitter last year. What are you doing right that the other people aren't doing?
I think I'm staying in the here and now. I mean, I'm not saying, okay, I'm betting that Bitcoin goes to 20,000 now. Everything I do in technical analysis is intended to support a presupposition that I have. You don't do technical analysis based on presuppositions. You do it based on what the market is offering you as facts. You know, where's the blood trail in the snow? You follow the blood trail in the snow. And I think that's the big difference is I try to stay in the here and now. I try to stay in the present. I try to be grounded in what the market is telling me right now. And sometimes the market doesn't tell me anything about what it's doing right now and what it's likely to do in the near term. But sometimes it flashes and rings bells and sends off fire signals and tells you the market's at a point where it's ready to make a huge declaration. But that's the exception. I mean, it's the exception when the market tells you something big is going to happen and the market's kind of advertising it right now.
Okay, so let's talk about the here and now. We're in 2019. What are the charts telling you about crypto in 2019?
Well, I think the starting point is not to launch yourself forward and try to project what's going to be in December of 2020. It's to try to roll yourself back and say, what has the market been doing? What's been the trail of the market through the woods? And what does that have to say for the present? I mean, we looked at Bitcoin, and quite frankly, that's the coin I'm interested in. I will trade Ethereum, I'll trade Litecoin, I'll trade Ether every once in a while. But I think the story in crypto is a Bitcoin story. Bitcoin is the legacy coin. I personally think 99% plus of all these other coins are going to end up being worthless. So why do I want to trade a market that is not only to be worthless, but on exchanges that are likely to basically shut down when anything dramatic happens and you lose liquidity? And so I want to be in Bitcoin. And I look at Bitcoin, and Bitcoin has been through a series of phases that are really historical. The last one being, of course, the parabolic advance that we had in 2016, 2017. It's rare for a market to have a parabolic advance on the log scale. It just doesn't happen. It's historic. And so when that parabolic advance was broken, it was an easy call to say Bitcoin's going down 80%. Every market that's ever had a parabolic advance on a log scale and has broken that parabolic advance has corrected 80%. So calling the 8% decline in Bitcoin was easy. And then, of course, we put in this huge 7-month symmetrical or descending triangle in Bitcoin, which was an easy call. Descending triangles are always bearish. And, of course, we still have targets that are lower. And the story right now is this potential head and shoulders bottom on the daily Bitcoin chart. The Litecoin head and shoulders has completed and is probably the leading indicator. It's the canary in the mine, quite frankly, I think, is Litecoin. But that's what I'm looking at is this head and shoulders bottom in Bitcoin. It is to the point where if you count back from the low of the head to the start of the left shoulder, what I call the wall of the pattern, it's 20 days. We are now 20 days forward from the low of the head today. And so it's time for the market to make a move. You look at the market the last couple of days, it's gone dead. Low range, very little change. It's what Wyckoff traders would call hinge days. We're in a hinge right now in Bitcoin. We're in the same kind of hinge we're in Bitcoin in November, early November, before we started the big climb out of the descending triangle, and we're hinging up again. I personally think this head and shoulders is going to fail, and it's going to lead to a downside. You know, here's my overall view. If I want to really kind of play pie in the sky in Bitcoin, I think there's a 50% chance it goes to 100,000 and a 50% chance it goes to zero. And so, you know, you got to balance those two. And really within that, I have to look and say, what's the market telling me to do right now? Quite frankly, the market's telling me that I'm willing to go to the long side if this head and shoulders gets confirmed, although I don't think there's a whole lot of room to the upside. I mean, I think we could go to 5,700 and that's about it. And so I look at the major trend in Bitcoin, and I still see a major trend being down. And, you know, I want to trade with the trend, but I would be willing to try the long side in Bitcoin if the head and shoulders bottom completes. I am long Litecoin. I mean, I'll give a disclaimer right now. I'm long Litecoin because I saw the head and shoulders bottom in Litecoin. And so that is a market that I'm going to trade. And so I think the next couple of days are going to really be key and going to be the determination of the next $1,500 move in Bitcoin.
Okay, so you talk about a potential $1,500 climb to $5,700. Would that give you a level of confidence that we're out of the bear market? Would that convince you that we're out of the woods?
Well, hey, I'm a Bayesian. That may not mean much to your people, but I believe in Bayesian probability. Markets kind of are like an onion. They unfold truth a layer at a time. You get a little bit here, you get a little bit there, and as you unpeel the onion, you kind of get down to what the reality of the market is. And so for me, it's one step at a time. You got to take one step at a time. The first step for me would be, a close over this 42.60, 42.70. Then you got to close over 44.19, which is the left shoulder high. Then I think you can start saying there's a chance that we've seen the low. I look at it this way. Hey, let's say Bitcoin goes to 100,000, 50,000, 20,000, $1 million. I don't have any desire to be long at the low. I could care less. I don't like trying to pick bottoms. I don't like trying to pick tops. Give me the easy yardage between the 30-yard lines using American football for kind of the analogy. I want to play the game between the 30-yard lines. I don't need to run a touchdown back 100 yards to be a hero. And so, I'll take it one step at a time and try to figure out what's the easy money. And the easy money is always the money in the middle. It's the money in the middle of the move.
Peter, you are certainly a hero with your calls here from last year, and we will stay in touch with you in 2019. And on that note, that's all the time we have for our first show of 2019. We'll be back every Thursday bringing you crypto news and views. What we won't be bringing you this year are price predictions. No more price predictions. Until next week, I'll be on Twitter at CryptoManRun, and you should trade well, my friends.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.